Hello and welcome to this MetaSwing instructional video for the Bloomberg terminal. In this video we are taking an in-depth look at the MetaSwing directional signals. Here's a MetaSwing chart. The directional signals that we're talking about display directly in the price pane. They're shown here. See these red A and E? Adeo signals here, transactional support signals, volatility shift. These are MetaSwing's directional signals. Here's a list. We're going to begin with the 6 different Adeo signals. Adeo signals come in long and short variation. There are the basic Adeo signals. Then there are those that are combined with N-band readings, which essentially heighten and expand their effectiveness. Now let's look at Adeo signals. Adeo signals occur when short-term price movement has been uncharacteristically strong and volatile, and usually counter to an intermediate-term trend. The signal has known performance characteristics that are accurate, projecting forward 3 to 5 bars. The 3 to 5 bar accuracy can be extended when multi-time frame analysis is used. To illustrate this, I've added another chart to the right, which is a 240-minute chart of the XLY. As you can see here in the beginning of March and at the end of January, we have Adeo signals that are appearing. Also, there's Adeo signals on the same days in the daily time frame. So this tends to give more weight and extend the validity of the daily signals in the shorter time frame here. Here's how to turn on and off the Adeo signals on the screen. Simply right-click, choose MetaSwing, go to Edit Color and Style. Scroll down the list. You can see we have upper and lower N bands and the SR lines enabled here. Come down to the Adeo short and long, make sure those are checked. Adeo long and short, that's checked for the actual symbols. And then for the long high slope, low slope, and volatility shift signals, check these boxes. Then all those will be on. Hit update, and there you go. The Adeo is designed to signal 1 bar prior to the possible opportunity. This type of anticipation makes it predictive. Here on this chart of the Euro-Pound cross, we see 2 types of market conditions. We see a downtrend ending around June, July, and then we see a sideways market range shifting to an uptrend. We have 2 Adeos here in May. One is trading with the trend and one is trading against it, or counter trend. This Adeo short at the top is with the trend, and you can see it signals fast and continues with the trend. The Adeo at the beginning of May is a counter trend Adeo long, and you do see that it gives you that 1 bar delay. And it's typical when an Adeo signals against a trend, it may delay 1, 2, or 3 bars, and you'll see several Adeos in a row. For that same reason, you can see here in the beginning of September how the Adeo condition in an Adeo short persists for 3 straight days. This is happening because trend is beginning to change and shift to an uptrend. A persisting Adeo condition is a bit of a warning sign that the trend may be changing. The Adeo signal is not a standalone trading system. It's designed to be used with MetaSwing's other strengths, such as support and resistance detection, overbought, oversold, and trend detection. Here on this 60-minute chart of sugar, you can see several examples of Adeo signals. As a trend following mechanism, it's quite accurate. And if price doesn't continue on the trend right away, it typically will give you, as I said, 3 to 5 bars of pause to consider whether or not your decision to enter was correct or not. You can see examples of that here on June 22nd and again here on June 28th. When it's correct, it's typically correct within that 3 to 5 bar period. And then up here in the latter July area, when trend absolutely reverses, you can see that you have a grace period to figure out whether or not you were correct or not. Now let's talk about the other variations of the Adeo signal. We're referring to the VS, HS, and LS. As you can see on the chart here, there are several of them printed. Here are standard Adeos, and next to it is an Adeo with a volatility shift condition. That's what the VS stands for. In TA, there's a new concept I've termed volatility shift. This refers to support and resistance in the immediate time frame, which essentially are N bands. The upper N band is resistance right away. Lower N band is support right in the immediate time frame. For instance, a specific type of volatility shift occurs when the lower N band is rising rapidly. Think about it. What this translates into is that significant support is rising rapidly. When it rises at a fast enough rate, it has an effect on current and future price movement. So this effect that I'm talking about essentially makes volatility shift a predictive signal. One signal you'll see is an Adeo with high slope, and that's represented by an HS. And this simply means that the lower N band is rising at a fast slope. When it reaches a certain criteria over the past 7 bars, it assigns it a high slope with Adeo. Here's an example of an Adeo short with a low slope condition. If you take a look at the upper N band for the previous 7 periods, it's falling rapidly. It actually has a negative slope. This means that resistance is approaching price very quickly. And that's a good additional probability to factor into your decision for a good short position or adding to a downtrend. This is an Adeo long with a volatility shift condition. That condition means that the N band, the lower N band, is rising rapidly, while the upper N band is not falling rapidly. Okay? Now, for a long condition, what has to be met is that the lower band is rising twice as fast than the upper band is falling. It's quite simple. It just means that support is approaching much quicker than resistance is approaching. With resistance not approaching very quickly, it means that your risk reward to the upside is going to improve because of that. So here's an Adeo long with a volatility shift signal, and it simply means that there's hidden momentum to the long side, and that's going to play out over the next 20 periods. As with all of our tools and methodologies, we specifically isolated volatility shift and backtested it. Just as with our other tools and methodologies, we've tested this over an 8-year market neutral period through 2 bulls and 2 bears and through a very large quantity sample. We isolated the volatility shift condition on a day in combination with no other signals or conditions. This resulted in a test of 69,644 days that the condition was present in the S&P 500 stock constituents. A test was done from each day, and each day a duplicate position was taken in the S&P 500 index. And as you can see here, volatility shift dramatically outperforms the random or the index. It gives a very serious advantage quantitatively if you want to combine that sort of condition with other methodologies that you're using. This is also why the ADEO with volatility shift or high slope or low slope they have much more profit potential in them in terms of stored and hidden momentum. ADEO signals work in any charting time frame. This is a 15-minute chart of the semiconductor holders ETF. Here you can see where ADEOs are identifying short-term reversals and also good trend entry points when a trend is in place. This ADEO short does not pan out, but as well though it gives you about 7 bars to figure out that the trend is going to go against you. That's very forgiving in today's markets. The other reason why I use ADEOs is a part of multi-time frame analysis to identify exits. An ADEO in one time frame can mean an exit of an existing position in another time frame. Thank you for watching this first directional signals video. Our next video on directional signals will cover exits and transactional support signals. Here's our contact information. If you'd like to get in touch with us, please feel free to do so. Good luck and good trading.